Good morning. Welcome to IG's early morning call. It's Wednesday, 29th of November. Let's take a look at the headlines as we continue to monitor what's going on in the foreign exchange markets as the dollar continues to weaken. We're now at 12, 13-week lows for the dollar. Investors growing confident that the Fed will cut interest rates sometime in the first half of 2024. Commentary out over the last 10 or 12 hours or so suggesting that this could well be the case. And as a result of that weaker dollar, we got a continuation of the recent rally in the price of gold, headed up to very near to its recent record high. And overnight, we've seen a hawkish Reserve Bank of New Zealand, and we've got a big jump for the New Zealand dollar against a whole raft of other currencies as we see the central bank leaving the door open for further interest rate rises dependent on the strength of inflation. And we continue to monitor what's happening in the oil markets. We've got the OPEC Plus meeting tomorrow, the postponed meeting, at which we're widely expecting to hear about further cuts or a continuation of the cuts in the supply of oil. Take a look at volatility. We continue to bump along where we've seen levels not seen since September 2018. And this continues to demonstrate that we've got this market where we are seeing some recent highs, although not in the FTSE. This has continued to underperform, and it continues to underperform. 74.39, expecting a weak open at the start of today's trade when we see things get underway at the top of the hour. Just a quick wrap up of what we're having across the rest of Europe. We are seeing gains at the moment in the German markets, 4 points above the 16,000 level, not too far away from these highs that we've seen, where we've seen the highest print in the German DAX since the beginning of August this year. Like the London markets, a little bit more fragile in the French CAC 40. We're resting on the 200-day moving average at 72.46. Curling over at the MACD indicates potentially a possible pickup on the downside. Momentum beginning to drain out a little bit of where we are. And it's going to take something to turn these markets around. Not quite sure what it is. We've got some economic data out a little bit later on today, which is unlikely to steer things. We've got German CPI data, which we'll talk about in just a few moments' time. But at the moment, at least, we're expecting a mixed start to the European trading day at the top of the hour. Just wanted to update you as well on what's happening with the IBEX index in Spain. Let me just quickly change this to what's going on, because the Spanish index is really racing away with what's happening. And you can see here, we're now 4 points above the 10,000 level. And I think I'm right in saying that if we go back in the markets that we've got recent highs, we haven't yet passed the highs that we saw back in February 2020 before the COVID rout on this market. You can see there that if we look back at this, it was just before the COVID break when the markets dropped. So we have a few points to go before we get to that, 90 odd points, but nonetheless, the IBEX is one of the better performing markets across the European session. Overnight in Asia, let's take a look at what's been happening there. We had gains when all was said and done on the Australian markets. S&P ASX 200 up just over 0.25%, but losses on the Hang Seng, losses on the Nikkei are on the session in today's trade. Let's take a look at what happened yesterday on Wall Street. When all was said and done, we saw gains across the board for all the major market participants. We've seen some interesting commentary out yesterday, which I'll cover in some more detail in just a minute. But the Fed's voting member Waller, increasingly confident policy is well positioned. But at the same time, we saw comments coming through from Bowman favouring interest rate rises if inflation progress stalls. There is no evidence of that just yet, but we'll have to see how things develop on the inflation front. But broadly speaking, the market's taking some sort of confidence from the commentary that we saw yesterday that we could well see some interest rate cuts. I want to show you the dollar basket. And we are looking at euro dollar in just a couple of minutes' time. But this is what happened during yesterday's session on Wall Street. The dollar dropping. And in today's trade, we've seen the lowest print on the US dollar that we've seen since the 10th of August this year. So 3-month lows or so for the dollar basket, which continues to illustrate what's happening in that direction of travel for confidence about the Fed's movement on rates. Let's take a look at what's been happening on these markets. We continue to trade not too far away from recent highs. This is the Nasdaq at 27 points above the 16,000 level. S&P 500, similar sort of price action, not too far away from the intraday highs that we've seen when we saw that market top out at levels that we've not seen there since the end of July this year. So US markets it's continuing to move up. Staying on the chart, just wanted to update you as well on what's been happening with spot gold, because this fallback in the dollar has continued to see a breakout of this channel that we've had, which I was talking about last week, where I was concerned it might develop into a double top, in which case we'd see a drop all the way down to 1870. But in fact, no, we got a break of this line of 2009, a big strong candle yesterday, and a continuation of that move up today. In fact, we are actually on the day's trade now down 0.06%. But is that a shooting star candle? We'll only know tomorrow. If it is, then we'll get some more downside. But the price calculation we've got is that we've got something like around about 2086, I think it is the calculation I made when we did this projection of the channel here. We did that projection last week, but in fact, what I've done is I've rounded it up, and I said the price target is now 2090. So if you're long on this, stop goes underneath this line of a breakout here. So stop just underneath the 2000 level. 2090 is the price target. We're currently trading at 2043 on the price of gold. So you can see that we are up there for the price of gold. Just want to stay on the charts again and talk about what's happening with spot silver, because similarly, we've got money going in there as well. Red candle today, but we've seen the highest print we've seen in this market that we've seen in silver since the 20th of July. So again, money going into other precious metals at the same time. Now, the euro-dollar trade will be under scrutiny today. The euro's position as one of the stronger currencies against the US dollar. Both sides of the Atlantic will get some macroeconomic data out today. In Germany at 1 p.m. UK time today, we get consumer price inflation growth forecast to further decelerate to 3.5% in November year on year from 3.8% in the prior month. To find a lower inflation rate, we've got to go all the way back to June 2021. Even though the ECB will have to look at inflation of all countries in the Eurozone, German CPI could potentially be the one to move the euro. So it is possibly going to be a currency of interest to watch today. In today's session, we've seen an intraday print that we've not seen since the 10th of August. If you're long on this going into the numbers today, stop goes underneath recent price action around about the just under the 109 level, 108.90s, that sort of area for a stop loss. Your price target is this high we had here back on the 9th of August at 110.65, and then you're then all the way up to the highs we've seen up here at 112.70. And lower inflation wouldn't necessarily be a bad news for the European currency. The euro has been rising against the dollar now for the past 2 months and is on a rising trend against sterling as well since the end of August. Quick update on what's happening with the euro-sterling trade. Euro down in today's trade now all the way down at 86.49. Now, lower inflation could mean that we've got those measures taken by the ECB are working. A higher than expected German inflation print today could support the euro. Now, economists anticipate an annualized expansion of 5% in the US today, where we're getting GDP numbers out for the third quarter. The first reading showed a 4.9% print. Also due this afternoon, wholesale inventories and the Fed beige book tonight. So watching out for euro-dollar trade across on both sides of the Atlantic. Outside of this, as expected, the Reserve Bank of New Zealand kept interest rates on hold overnight at 5.5%, but the hawkish tone from the central bank continues. And as a result of that, we've seen a rise for the Kiwi against the whole basket of currencies. Here it's against the New Zealand dollar. It's not really of interest against the US dollar because of the way the dollar is moving at the moment. But certainly this was interesting at 92.96. The statement said, if inflationary pressures were to be stronger than anticipated, the official cash rate, OCR, would likely need to rise further. And that's why we've got interest in buying on the Kiwi. Let's shift the gear now into what's happening on the corporate news headlines that we've seen out this morning. I want to pick up on Halfords. It's not a massively wild statement out today. Profit before tax looking good, up 15.8% to 21.3 million. Revenue increasing 13.9% to 873.5. But for me, one of the headlines, if you read further on down and lower on down, is that margins in percentage terms declining on the period. 210 basis points down in terms of distance from recent margins. Look at what's happened with the Halfords share price. Recently, we've seen it print at a line not seen since the 26th of April 2022. But since then, a little bit of a pullback ahead of these numbers out today. I'll be interested to see just where it goes today at 228 pence. Could be a mover as a result of these figures out for the first half at Halfords. Meanwhile, late last night after the closing bell on Wall Street, we saw a stock trading up on the session. Hewlett Packard Enterprise narrowly beating expectations in Q3. On an adjusted basis, the company earning 52 cents a share. Now that beat average estimates of 50 cents, revenue coming in line at 7.35 billion. HPE now says it expects revenue in the first quarter of fiscal 2024 to be in the range of between 6.9 to 7.3 billion, compared to the estimates of 7.28. Earnings per share forecast between 42 and 50. We've been looking at 47 cents previously. But I think it's interesting to note that what happened late yesterday was that we saw the stock end on the way up after the close of the session yesterday. It's not an all-session stock. I want to show you what happened in the cash trading day yesterday. We ended down at 15.52, and that intraday low was the lowest we've seen since the beginning of November. But the stock rose 0.6% after the close on the session yesterday on extended trade after those figures were released. Got some earnings out today in the US, not all sessions, but a couple of stocks worth mentioning. Dollar Tree due to report before the market opened today. Street anticipating earnings of 101 per share on revenues of 7.4 billion. A year ago, earnings coming in at $1.20 and revenue just under the 7 billion mark. Dollar Tree is one of these interesting stocks because it is in the area which is most expected to benefit from the downturn of the economies, because it is a discount store. But if you look at the share price chart, it's really been under pressure. 116.07 is where that stock will open this morning. And we'll have to see what happens with that company when it produces those figures before the bell today. Also expected today, earnings from Foot Locker and Snowflake. Again, neither of these are all-session stocks, but just give you a flash there of what it is we're expecting. Earnings per share at Salesforce, 6 cents over the $2 level on revenues of 8.75 billion. Snowflake after the bell this evening, 16 cents expected, revenues of 713. Just one other area I wanted to quickly catch up on, and that is to mark the sad passing of Charlie Munger, the veteran right-hand man, the billionaire stock picker Warren Buffett. He's died aged 99. He was 6 or 7 years older than Warren Buffett. Warren Buffett has come out with obviously an impassioned statement. He's been the vice chairman of Berkshire Hathaway, which is, of course, Warren Buffett's sprawling empire. They became known as a dual partnership, which has done enormous benefit for many, many shareholders in Berkshire Hathaway. It started off as a textile manufacturing enterprise, and Munga and Buffett taking it into a global investment powerhouse. So that'll go down as a big moment. And the focus now very much on Warren Buffett. The succession plan is very much in place, which Charlie Munger helped Warren Buffett craft. So there is a succession plan for the next big event that will happen at Berkshire Hathaway, whenever that occurs. But many mourning the passing of Charlie Munger late yesterday, peacefully in hospital. Let's just catch up on what's happening in one other area of the market, oil prices. I want to talk about this in the context of the OPEC Plus meeting tomorrow. Now, the price of Brent holding on, broadly speaking, to the rise that we saw yesterday at 81.48. Yesterday evening, the latest API data showing 817,000 barrel decline in crude oil stocks. Gasoline inventories also fell by nearly 900,000. Distillates rising by 2.8 million. But clearly the upcoming OPEC Plus meeting is really what holds the market's attention. According to the latest Reuters reports, talks appear to be difficult. The deeper cuts that were talked about earlier in the week may not happen. According to some analysts, a further delay to the meeting is even possible. The meeting has already been delayed from November the 26th. OPEC Plus sources said this was because of a disagreement over output levels for African producers. This chart is going to be the one to watch. It is Brent, which is the benchmark of OPEC Plus, and that's the one that will move in tandem with WTI, but Brent, as I said, is the benchmark for OPEC. That's it. We're back at 10:30 with Chart of the Markets. Today I'll be talking to Lee Sanford, who's a member of the technical, the STA, and Society of Technical Analysts, and he'll be with me talking about his choice on charts. We'll be taking a look, amongst others, about the record, or recent highs, I should say, in the NASDAQ, and he will be looking at that technically from a point of view as to how to trade it. So join me at 10:30 to join Lee Sanford on his view on some of those charts in the markets today. That's it. Watching out for Halfords at the start of today's session in the London markets, and a mixed trade expected at the start of this session. Back at 10:30.